The stock market is off to a rocky start this year, as investors struggle to find direction. Although all three major indexes began the day on a positive note, they ultimately lost steam and declined by the close of the trading session. Meanwhile, natural gas prices experienced a noticeable rise, driven by a polar vortex that swept across several states in the United States, bringing freezing temperatures and heightened energy demand. On the international front, global stocks saw a significant uptick, and a weaker dollar also provided a substantial boost to Bitcoin, pushing the cryptocurrency's value to an impressive high of over $102,000 at one point during the day, showcasing its volatility and ongoing appeal to investors. In other news, Fubo TV investors had a remarkable day, as shares of the company soared by over 250% even before the markets officially opened. This extraordinary gain was fueled by a groundbreaking deal between Fubo TV and Disney to launch an entirely new live TV streaming service focused on sports. The partnership marks a significant shift in the entertainment landscape as streaming platforms continue to evolve and compete for dominance. Disney's Hulu TV and Fubo TV will merge to create a unified service with an impressive subscriber base of 6.2 million. This makes the combined entity the second largest live TV streaming platform in the United States, trailing only YouTube TV. The collaboration will bring Disney's live sports content to Fubo's platform and is expected to generate $6 billion in annual revenue. The new service will operate under the Fubo TV brand, with Fubo co-founder and chief executive officer David Gandler continuing to lead the company. Despite this, Disney will hold a 70% ownership stake, giving it significant control over the venture. Hulu itself will remain an independent product, maintaining its current structure and offerings. While Fubo TV may lack the brand recognition of its larger competitors, the company has managed to carve out a unique position in the highly competitive streaming industry. Prior to this deal, Fubo TV faced challenges, including a market valuation of $481 million, subscriber losses, and rising programming expenses. However, Disney's substantial financial backing is expected to address these issues. As soon as the agreement is finalized, Fubo TV is projected to achieve cash flow positivity, signaling a new chapter for the company and its investors. Live sports remain a key driver of traditional television viewership, but the high costs associated with securing broadcasting rights have impacted its profitability. For example, Disney spent billions of dollars to acquire the rights to broadcast Monday Night Football on ESPN and college football games on ABC, which contributed to a 6% decline in ESPN's profits during the most recent quarter. However, competition in the live sports streaming market is intensifying. Amazon is also making significant strides, having streamed Thursday Night Football games throughout the season and preparing to broadcast its first ever National Football League playoff game in the coming days. The partnership between Disney and Fubo TV strengthens Disney's presence in the live sports market by combining its national sports coverage with Fubo TV's regional focus. This strategic move allows Disney to expand its reach and cater to a broader audience. Additionally, Fubo TV has decided to withdraw its legal action against Venue Sports, a competing sports streaming platform backed by Fox and Disney. This decision signals a shift in priorities as the company focuses on its collaboration with Disney. In the broader entertainment industry, consolidation is becoming a common theme as companies strive to remain competitive in an increasingly crowded market. Today's deal between Fubo TV and Disney is just one example of the ongoing trend known as the Great Rebundling, where streaming platforms merge or form alliances to strengthen their positions. This phenomenon has led consumers to question whether these new streaming bundles truly offer an improvement over traditional cable packages. Elsewhere, Getty Images and Shutterstock are reportedly exploring a potential merger to compete more effectively in the growing market for AI-generated images. Following this announcement, shares of Getty Images rose by over 7%, while Shutterstock's stock declined by over 4%, reflecting mixed investor sentiment. The semiconductor industry also had a particularly strong day, with several major players posting significant gains. Foxconn, a leading electronics manufacturer, reported record revenue for the fourth quarter, driving its shares up by over 3%. This positive news also benefited other semiconductor companies, including Nvidia, which gained over 3%, Micron Technology, which climbed by over 10%, and Taiwan Semiconductor Manufacturing Company, which rose by over 5%. You should also know that clean energy stocks also experienced notable gains. Plug Power surged by nearly 20% after the Department of the Treasury announced substantial tax credits for clean energy companies. A competitor in the same space saw its shares increase by over 6%, driven by plans to implement cost-cutting measures, including layoffs. In the payment processing sector, Paychex is considering acquiring smaller rival Paycor HCM. News of the potential acquisition sent Paycor's shares soaring by over 23%. However, not all companies shared in the day's gains. Tencent Holdings fell by over 7% after the US Department of Defense identified it as a Chinese military-affiliated business operating in the United States. T-Mobile also declined by over 3% following downgrades from both Wells Fargo and RBC analysts, who expressed concerns about the company's slowing growth and rising valuation. Over in the bond market, yields on US Treasury bonds reached new highs, reflecting shifts in investor sentiment. The yield on 30-year Treasury bonds rose to 4.85%, the highest level since November 2023. These rising yields are partly attributed to an anticipated government debt issuance totaling $119 billion, which has increased the supply of Treasury bonds and pushed their prices lower. Broader concerns about inflation and the potential for fewer interest rate cuts in 2025 have also contributed to elevated bond yields. For investors seeking fixed income opportunities, today's bond yields are particularly attractive. This indicates that bondholders are receiving higher monthly dividends, making bonds and bond exchange traded funds a compelling option. Financial experts continue to emphasize the importance of investment-grade bonds in diversified portfolios. Solita Marcelli, a strategist at UBS, noted that while the urgency to prepare for lower interest rates has diminished, prioritizing durable income and putting cash to work should remain key strategies for investors. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.